Good morning, good afternoon, good evening. Thank you guys for joining the 9 podcast hosted by yours truly, Kevin Thompson, founder and CEO of 9 Capital Group. Thank you guys for joining me. As I always say, subscribe to the channel. As I always say, go and get my book, You Must Be the CFP, live on Apple and Amazon. If you have any questions, comments, or concerns, you can email us at info@9icapitalgroup.com. Send us your questions. Go to the website at www.9icapitalgroup.com. Schedule an appointment. As you know, we're here to do what? Educate, empower, engage, and also entertain. Follow us on all social media channels at 9iCap or at MLB the CFP. Today, we have Ivana Delevska of Spear Invest. She's going to be talking about AI, the what's, the hows, the whens, the whys. Is it overvalued? Should we be concerned? Is the market looking more like 2000.com? We're going to get all those questions answered today, guys. Without further ado, Ivana, welcome to the show. Let's get it. We have someone I call a friend, Ivana Delevska, Spear Invest. Thank you for joining the Night in This podcast today, my friend.
Thanks for having me, Kevin.
So I wanted to have this conversation because I'm a natural cynic. We've seen GDP numbers come out today and, they're better and all the other stuff. And we know a lot of that's coming from the AI infrastructure spending, the CapEx spending, and all of that stuff. So the numbers can be a little bit funky at times. But I guess my first question, because I sent you a couple of questions, is the outlook on AI. And here is my, I guess, my 2 cents, right? I feel at times that this is looking a lot like 2000, 2001, where when you look at the charts, everything's kind of aligning like, hey, we're looking very similar to the markets that we experienced back in the early 2000s. So let's just start there. The outlook on AI, what is your current outlook as of today?
Well, Kevin, I think the main difference that we see comparing this cycle with 2000 is that there is real fundamental support in earnings.
Okay.
So if you look at a lot of the large cap companies like NVIDIA, like Broadcom, they are actually generating earnings from this investment wave, right? So that's the first big difference. So if you look at multiples, they're actually not spiking up at all. They're trading right in the middle of their historical ranges. And in some cases, when they go through periods of consolidation, like we've seen in the past few months for NVIDIA, you actually see the multiple drop because earnings are growing, but the stock price has been somewhat stagnant. So from a valuation perspective, this doesn't look anything like 2000. Obviously, there is a lot of speculation. There is a lot of uncertainty whether use cases are coming out to justify the $1 trillion of investment. So that's a valid question, right? But if you look at kind of where we are today with the numbers we've been generating so far, it is actually very supportive of where the stocks are today.
Well, here's what scares me, right? You have China coming out and they're saying, you guys are spending way too much on this stuff. We can do it for pennies on the dollar. And and I know we've had whether it be the current administration talking about, we don't want you to sell these things here. If we do, it's going to be a 15 or 20% increase and we want that money or whatever, yada, yada, yada. So I guess my concern is this. Let's just say hypothetically, we say you can't sell these chips or you can't interact with China. What's stopping China for just dumping their chips onto the market or their technology onto the market to all these other countries because they can do it much more cheaply? Where does that leave us? Where does that leave us with a product or service offering that's 10 to 20% higher? And will that just decimate what we've basically tried to build?
That's a great question. So basically, first of all, I would compare the technologies are not really apples to apples, right? So if you look at a cheaper model that's coming out of China, that doesn't necessarily mean that you can come up with models cheaply. And this is because their models are based on what's been developed already in the US and has costed a lot of money. So I wouldn't necessarily say that the Chinese technologies are cheaper. I don't think they're better, right? So NVIDIA has this unique advantage of this CUDA platform where companies can literally just take their chips and plug and play and build solutions on top of it. that took years to build. It took them almost 15 years to develop this platform and make it accessible. And they're continuously investing and building on top of that. Huawei's chips, from what we hear, are very good, but they don't really have that platform where companies can build right on top, right? So if you want to use the Chinese chip right now, you really need to be a large company that is able to develop that CUDA layer internally, if you will, right? So just on the bare metal, you can't really build anything. So if you're a startup, there's really no way for you to advance. So from that perspective, I think the US has a very strong advantage in terms of development and innovation, right? Because the NVIDIA platform is much more open than what you can do with the current Chinese chips. Now, this over time may change, right? In 15 years, it may look very different. But as of right now, there is those two kind of fundamental differences, I would say. First, I don't think Chinese chips are cheaper. And then second, the platform is just not as robust and open as NVIDIA's platform.
Well, yeah, you said the Chinese chips may not be cheaper, right? And I get that. But that's not stopping someone from saying, okay, we're a state-owned industry. We can take the loss. Who cares? We just want to basically disrupt your market. Much like the OPEC nations can say, we're just going to dump a bunch of oil in your market. We're going to destruct your whole oil industry because you guys need it at $65 to $80 a barrel. We want to get it down to $50 a barrel, and we're just going to disrupt your entire ecosystem. So what's stopping? Yeah, go ahead.
I don't know if that's realistic, because I don't think they have the capacity to do that, right?
Okay.
So that's not something. I think what they can do is they can offer it cheaply to their Chinese-based companies to develop something like AI applications sooner, but I don't think the capacity is there, right? So that's really, like, right now, if you look at it, the real bottleneck is capacity, right? So NVIDIA could sell much more than they currently are, but they really don't have the capacity to do so. So we're still at that point where, like, any incremental addition you want, you actually need to make an investment into TSMC for fab, right? Into all of these things that we're talking about. And that's partially why we're so excited about, right? Because in order to advance from here, you still need to make a pretty significant investment, whether it's in equipment, whether it's on the chip side itself, or whether it's in the data centers themselves. So this is where we're seeing the best returns so far. It's not on the model side. It's not in the application layer. It's really in this base level of investments that need to take place.
I heard a lot of things right there. And you said data centers. So we've had them come into our environment, and there's been a couple that they're wanting to build here, and we've been adamantly opposed to it because we know it's going to raise our electricity costs, disrupt our water systems. I guess my question is, and this is kind of an aside, should we be concerned with the rising energy cost that's being placed on consumers like ourselves? Because is it fair for us to have to subsidize the additional cost that the Facebooks or the Amazons or whoever wants to build these data centers? Like, at what point is the consumer like ourselves going to say, no, we don't want these anymore? And is that disruptive in the overall AI implementation?
Yeah, so that's a great question, right? So let me ask you this. How much are you willing to pay to have ChatGPT for free?
Well,
right?
so I'm a $20 user. I'm a $20 user.
So at the end of the day, the biggest beneficiary thus far. So the way I view it is, like, there was one first wave of investment, right? Where this transformer model made it to data centers, and now there are these large language models with search capabilities that we all have access to. So the real beneficiary from the first wave of investment has been the consumer, because they're not really paying much to OpenAI, right? Like, most consumers just use the free version. So I think ultimately the biggest beneficiary of this will be the consumer, whether it's through productivity improvement, which I think is going to be the biggest part of the pie, or other ways that they're going to benefit. I think that the question is going to be, how much of this can companies capture? That's really been the problem so far, right? Like, companies are not really capturing very much from this benefit. And that's something that we're going to, as we look into this second wave of investment, which is going to be the agentic wave, I think there's going to be an opportunity for companies to capture a little bit more of the pie. But ultimately, I think the beneficiary is the consumer. So I think paying extra for electricity prices, in a way, just kind of the market decides what, like if the consumer wants ChatGPT, then yeah, they're going to have to pay for higher electricity. And then one other thing I would add is that I think electricity prices overall are going to increase, but there is also a way for data centers to add capacity with their own purpose-built generation, right? So they don't necessarily always have to plug into the grid. And that's really like depends on regulatory environments and state by state regulations, but there are two different models. One is where the power plant is part of the grid and they're drawing from that. And another one is where there is a purpose-built plant, and then the economics they can work out between the generator and the company. But I think the broader point is that this is actually beneficial for the consumer, whether it's like justifies the high energy prices. That's what the market ultimately will decide.
Yeah, and well, energy prices is just one part of it, right? Like for example, here, there's all of these subsidies that they're getting, the tax breaks and all this other stuff. There was one where they're trying to get like it's like a 10 or 15 year break even for the municipality. I'm like, what? I get that we have the regenerative AI and all the other stuff, and I always like to put the quotes around this, the free version of open AI, because you and I both know nothing is ever free.
Yeah,
Because
exactly.
that data is valuable to them. Like that data you're putting in there and they can reuse. That's very valuable. That's gold to them, and they're willing to give it to you. If they're willing to give you something for free, you always gonna have your antenna come up like, oh, well, why are they giving it to me, right? So,
Yep.
but outside of that, like right now, and this is the reason why I said previously when we talked about the market and AI, kind of the growth, and me, it's being reminiscent to 2000. Like you said, it's not necessarily reminiscent, but everything is going up, right? There's IPOs being flooded in the market, and they're like, oh, they're doubled up in price. We have crypto, it's going up. We have gold, it's going up. So everything is going up. Does that not scare you at this present time?
So that's a great question. I think this speculative bets going up has to do much more with interest rates than the AI wave. Okay. So I would like in our universe of companies, we're really seeing bifurcation. Like there is a layer of the market that seems very speculative, right? This would be companies that they're not necessarily generating revenues today. They're burning cash, and there is and those have done particularly well this year. I think that why I wouldn't fight that, right? I wouldn't be shorting those companies.
Don't fight the Fed.
Yes, exactly. You don't want to fight the Fed, but that's really like I would tell investors like always focus on the fundamentals, because when things turn, you really want to own the company that actually is like everything is going to go down, right? But you want to own the ones that have fundamental support. So then when things stabilize, that's what investors are going to go after. So we're not really chasing some of these like what we think are overly hyped opportunities and trying to stick with fundamentals. There is also like, it's not that easy to make the distinction, because I'll give you quantum computing as an example. Uh-huh. Quantum computing stocks are doing well, but fundamentals are actually improving. Okay. And the quality of those businesses is not very high. They're early innings. They're still burning cash flow, still in this investment phase. But if you believe that fundamentals will continue improving at this pace, it does warrant an investment today, right? So it's all about kind of taking the right risks and assessing how much risk are you willing to take, and what are you getting for that risk you're taking.
I love what you're saying here, but this is the most important point I think we wanted to kind of hit during this conversation today is, are you concerned with the government intervention in regard to taking stakes in these companies? Should we be concerned about that? An Intel stake, then maybe there's an NVIDIA stake. Maybe there's at what point should we as investors start to get concerned with that?
Yeah, I think the government taking stakes in companies sets a pretty bad precedent. So the Intel situation is a bit of a one-off. Mm-hmm. That I can kind of see why the government would be intervening here, especially since it has become a geopolitical battle between China versus US on technology, and you have this tech leader that is really underperforming here, meaning Intel. So you can always justify it on a case-by-case basis, but the broader point, right, is that no, the government shouldn't be taking over entities, right? So I hope this is limited to the Intel case. I think in the case of Intel, it has been making positive changes. I mean, it's always like when there is a positive change on one end, it's a bit of a zero sum, right? So somebody else is getting hurt. That's one thing I would highlight. So if Intel becomes stronger, all of a sudden they're stronger competitor to AMD, right? So it's not necessarily like all of these are you can just make like take over a company and make everything better for everybody. But yeah, I'm more concerned about the precedent that's setting, not necessarily as concerned with Intel's situation specifically, because it does make sense that they've struggled a lot over time.
Yeah, but you're effectively picking winners and losers, right? You're saying, well, if we're going to back this company, then what happens to an
That's the
AMD?
part I don't like, right?
Yeah,
Like you're backing this company. Well, what about AMD? Why don't you go back AMD now, right?
yeah.
That's also, so that's basically that is where the problem becomes. Like in this particular case, it may be okay, right? But then all of a sudden you're setting this bad precedent that like it makes it much more challenging for investors, right? To invest if it's not a level playing field.
So we've had a huge run up in the markets, right? We're at or near all time highs. It just keeps going up and up every single day. I know we've had a couple down days, which is just normal. I guess my question is, what if we're wrong? What, not you being wrong, but in general, all this investment, all this expectation, this is going to be transformative. Well, the internet was transformative, right? And a lot of companies just fell out of the wayside back in 2000, 2001 or whatever. They got gobbled up or what have you. So what if this is just another iteration? I'm not saying the dot-com bubble, but what if it's just another iteration of just like, hey, yeah, it was transformative for the time, but it's not as transformative as in having 4 companies or 5 companies bigger than the entire Chinese stock market.
Well, I think that's TBD. I think what I can see from where we stand is that there is going to be winners and losers. So not everybody will do well. And if you compare this to the dot-com bubble, I think it was a similar thing where like some companies actually came out much stronger out of it, right? Even though many did not make it. So I think it is likely that ultimately this ends up being that way, one way or another. Every time you have disruption, that's what happens. But I think this makes the point for investors to really focus on the companies with strong fundamentals, right? Because right now, there is a lot more speculation in the application layer. There is a lot more speculation in the model layer, right? So like these companies are coming up with models. We don't know how they're going to monetize them over time. Clearly, they have some sort of plan. But we don't, like as an investor, there's no way you can get conviction on how that plan is going to play out. But then if you look on the infrastructure side, the dollars are getting invested, right? So it's a lot less risk to be invested here. Or if you look at the cybersecurity side, there's really no way you can make an argument that the cybersecurity threats are less, even no matter which way this plays out. So I think that's why it's very important, rather than chasing kind of what the stock that your neighbor bought, to really dive deep in the fundamentals and understand what you are buying.
Ivana, you're phenomenal at this, and this is why I wanted to have you on my show. A couple more questions, if you don't mind. So we've talked about AI, we've talked about the implementation. No one knows what this is going to look like. We've seen the movies, right? We've seen Terminator, we've seen all these different movies. In your best case, what do you think this is going to look like 5, 10 years out? Is it just something that's like, hey, I now have an AI assistant where it basically screws all of the younger kids because all the entry level jobs are taken away, right? The easy entry level jobs that are note takers or task people. Or is it something like I have an AI where it always goes around with me like a Iron Man, like the Jarvis on Iron Man? Like, is it that type of thing? And maybe that's way far down the line, but in the next 5 to 10 years, like what's the expectation that I should be, what should I be expecting from AI?
Yeah, so our models, basically, the way we have it modeled is that in 5 years, there is going to be pretty broad proliferation of AI agents. So these are agents that sit on your computer, and they can help you with whatever job you're doing, whether it's a sales job, whether it's product development. They're basically sitting there alongside you and improving your productivity. So that's the base case. That's what, if you look at the investment that's getting put in place today, we have pretty good visibility in the next 3 to 5 years, how many data centers are being built. And this is really the main purpose or like the main use case that they're being built for.
Mm-hmm.
The next wave will be the robotics wave. That's still in very, very early innings. And that requires significant manufacturing facilities, right? It's not as easy to execute. So I think that's going to take closer to 10 years than 5 years. So that's basically our timeline. Is anytime you have something physical, it requires much more regulation. Like autonomous driving is a good example. It's been around forever. It's making improvements, but it's still really not there yet to a point where you can have a car on the road fully autonomous. So the physical part, I think it's going to take longer, and it's going to require yet another leg of investments. And then to your point, I actually see it a little more positive in that what AI can do, this agentic AI, it can really amplify what a junior person can do.
Okay.
Right? So, and I'll give you one good example from my business. It used to be that I would need at least 4 support analysts to do the job that I do. Right now, I don't even need to use one analyst. I can share that analyst with multiple other people. So people can start their own businesses and provide whatever core competency they decide to focus on, and really leverage it across multiple people, because they have all these tools. They can communicate much more easily. So I think it's not necessarily like, it's easy to say like, oh wait, like now you don't need 4 people, right? But those 4 people can be having their own businesses, if you will, supporting much broader audience. So I think that's going to be the case across the board for young people. I think there is a case to be made, like the younger you are, the more your capability can be increased by AI, if that makes sense, right?
It makes sense to me. And this is, again, one more question, if you don't mind, because I like to keep these short, because I think you do a phenomenal job. Is what scares me the most is like, for example, I say this in a lot of the articles that I write and a lot of the stuff that I've been quoted in. I'll say it's concerning for a person who's entering college, right? 4 years ago, they were saying coding is the next best thing. You got to be in coding. And now the coders are coding themselves out of work, right? So as a person that's a freshman in college this year, that has a goal of being, I want to be this, like the fear they're feeling right now of saying, well, if I go in hard on this 4 years from now, I may just not, it may be worthless. Like what would you tell the younger individual that's going into college? Like what degree plan do we go for at this point? If everything's going to be, AI is moving so rapidly and jobs are being just or pushed aside. Like, are you concerned about that?
So yeah, I think more than a degree, people really need to focus on skill set.
Okay.
Because at the end of the day, being adaptable is going to be very important. Being creative is going to be very important. I think the general perception is like, hey, if you're in a creative industry, now you're going to get replaced because AI can create. That's not necessarily how it works, because really original content has even more value now,
100%.
right? And how you prompt the AI to create for you, that's really going to be valuable. So I think people should really focus on skill set rather than a degree per se. I think any degree you choose, AI will be able to enhance it one way or another. And even with coding, like I think that's a good example. A lot of people in technology now are losing their jobs, right? And they're like, oh my God, like I thought like in tech, this is like the guaranteed career path. I think they're losing their job, but it's not necessarily a negative, because I think they may be able to transition into something that will be a lot more value add than what they were currently doing on the coding side, right? So if you understand how these models work, you can build something much more powerful than what job you were doing before. So sometimes a lot of these changes are initially bad, but I think change always creates opportunity. At least that's how it is for our fund.
Well, you're absolutely right, Ivana. Spear Invest. I appreciate you being on the show because again, I like to keep these short. I got one more last question for you. So, if the expectation is for us to be a chat bot and or an assistant, was I guess was Apple a little early on this with their Siri because wasn't Siri supposed to be that or what was Amazon's version Alexa? Wasn't Alexa supposed to do that? So were these companies just early with a bad integration, or is
Yeah.
it going to be something like they're just going to build on top of that we already had it, so now we're just going to make it better?
Yeah, I think the problem was they had the idea, but they didn't have the technology to support it.
Mm.
So if you have like a chatbot that's not useful, it's not really all the
Yeah.
help to have it, right? So
Yeah.
I think the idea is with these new tools that they are actually going to come up with useful tasks. And I think more than the consumer, I think B2B is going to be a very big use case because there's so many jobs that are today done manually, and
Mm.
there's so many jobs that are not even possible to be done manually because they're so time consuming. So with these chatbots, you can easily tell a chatbot, hey, go to my CRM system and see which clients are interested in what I'm doing, right? So that if I had to do it on my own and scroll through, oh, look, this guy read
Yeah.
my report, that would be like almost time, it is time prohibitive. So those are the types of use cases. And then, yes, I think Apple really dropped the ball. I think they could have done a better job. They had the idea, right? But going from the idea to making it into something useful, we haven't seen that yet. So I think that's to come. We'll see if they're able to execute, or somebody else likely will.
All right. Well, Alana, thank you so much. I'm going to give you the last word. Give the people something that you want to leave them with, feeling joyful about the expectations coming out for AI, the new world we're going into. What would Ivana tell the individuals that are listening to this podcast right now about what's ahead?
Well, we are actually very excited about the future coming ahead, right? I think AI is going to be transformative in a way that it's helping people rather than displacing jobs. I think people will see that after the first wave of investments. I think we're very early from an investment perspective. We're seeing a lot of opportunities across the board, whether it's on the tool side, whether it's on the security side. There just whenever changes happen, it really does create a big wave of opportunities. So I would say I would tell especially young people, really make sure you're invested in this wave, because I think it's going to generate a lot of value.
Ivana, thank you for joining us. Spear Invest, great job this year. Your ETF is killing it. We appreciate everything you've done. And again, thank you for giving us some time today.
Thanks, Kevin. Great seeing you.
We just had Ivana Delevska of Spear Invest on the call today, talking about AI, talking about some of the concerns out there. Is it overvalued? Are we beyond our skis? She did a phenomenal job of explaining why we're not necessarily overvalued right now. I talked about some of my concerns, how it's reminiscent of what we went through 25 years ago. But she is the preeminent voice in this industry. You have to listen to her. Spear Invest. Check out her website. Check out some of her funds. She does a phenomenal job. She knows the ins and out of the industry. By far my favorite individual. Subscribe to the channel. Go and get my book, MLB to CFP, live on Apple and Amazon. You have any questions, comments, or concerns, you can email us at info@99capitalgroup.com. Send us your questions. Go to the website at www.99capitalgroup.com. Schedule an appointment. As you know, we're here to do what? Educate, power, engage, and also entertain. We talked about AI today. Hope it was a valuable use of your time. Stay humble, stay safe, my friends. I'll see you again soon.